Welcome to the Daily Insights That Matter. Now, the Ministry of Commerce and Industry released India's foreign trade numbers. With the slump in global demand, let's look at how India's foreign trade fared in the month of May. India's merchandise exports or goods exports came in at $34.98 billion in the month of May, which was a contraction of approximately 10.3% when compared to the same period last year, as demand in key sectors such as petroleum products, gems and jewelry, chemicals and ready-made garments slowed down. Now, merchandise imports, on the other hand, witnessed contraction for the fifth consecutive month as they fell by 6.59% to $57.1 billion amidst the cooling commodity prices, thereby creating a trade deficit which widened to $22.12 billion. Services trade, on the other hand, registered an export of $25.3 billion as there was sluggish demand from overseas buyers. Service imports, on the other hand, stood at $13.53 billion in the month of May, creating a trade surplus of $11.77 billion. The overall trade deficit, therefore, narrowed to $10.35 billion from $12.2 billion in the month of May last year. Now, India's exports have been affected due to muted external demand on the back of global headwinds and a slowdown in its key markets. Now, to tackle these issues, the government has identified 40 countries which cover 85% of India's exports and are focusing their efforts to increase the exports to these countries. Apart from this, the focus is also on a twin strategy of import substitution and export promotion. Additionally, India has introduced several policies to substitute inbound shipments and make India a manufacturing hub to cater not only to domestic but the international markets as well. Now, the government is projected to receive a record-breaking equity dividend of approximately 63,056 crores from 67 listed public sector undertakings or PSUs for the financial year FY23. Now, this figure is based on the final dividends proposed by these companies for fiscal FY23. This dividend amount represents a significant rise of 24.7% when compared to the dividend of around 50,583 crores received by the government from the listed PSUs in FY 2022. Now, it's worth noting that the government's dividend for the current fiscal year may increase further as a few PSUs including GAIL India, Hindustan Copper and Barmer Lorry are yet to declare their final equity dividend. Now, the dividend for the fiscal year FY23 is more than 2 times the amount received in the pre-pandemic financial year of FY19 when the government received around 29,049 crores from these PSUs. Furthermore, this dividend amount is nearly 50% higher than the previous pre-pandemic all-time high of approximately 42,153 crores in the fiscal year FY14. Now, a significant portion of the dividend payment for FY23 will contribute to the government's non-tax revenues for FY24. Based on the numbers, it appears that the government's dividend income from PSUs will exceed the budgeted estimates for FY24. According to the union budget presented in February this year, the government was projected to receive around 43,000 crores in dividends and profits from the central non-financial PSUs for FY24. Additionally, the budget estimated the dividend and surplus from the public sector banks, the Reserve Bank of India and other financial institutions at approximately 48,000 crore rupees. In comparison to that, the private sector banks, RBI and financial institutions have collectively declared dividend payouts of around 1.05 lakh crores for the fiscal year FY23, which will be reflected in the government's accounts for FY24. Last month, the RBI board approved the transfer of around 87,416 crores as dividends to the union government for FY23. Now, this is a big positive for the central government's finances, as a dividend that surpasses the budgeted estimates would benefit public finances in FY24 and provide the government with the capacity to increase public expenditure without concerns about breaching the fiscal deficit target. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.